Buying a home is a big deal. I mean, it's a huge purchase, and if it's your first time buying a home, you might not know what to look for. And CNBC just put out this article which says that 64% of millennials have regrets about buying their home, and in this video, we're going to be talking about what these regrets are and what you need to know if you're buying a home, that way you don't have regrets later on. What's up everybody, I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. For most people, your home is going to be the biggest purchase you'll ever make in your lifetime, and so when it comes time for you to actually buy your home, you want to make sure you do it right. I've been involved with real estate for a decade now as a real estate salesperson, as a real estate investor, and I'm an attorney as well. And so I've seen real estate from a lot of different lenses. And today I want to talk about the things you need to understand when it comes time for you to buy a home. That way you don't have regrets about your home purchase later on. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. Bankrate did a study where they asked people if they had regrets about buying a home, and CNBC covered this poll. And what they found is that out of the people that they interviewed, 64% of millennials say that they have at least one regret about their home purchase. But it's not just millennials. About 45% of Gen Xers have regrets, and about a third, 33% of baby boomers have some type of remorse or regret about their current home. You can kind of see that as you get into the older generations, you have less and less people who have that sort of remorse. Maybe it's because they have the experience of buying a home before. But what I found that was interesting is what Bankrate's senior economic analyst said, because he says, quote, "These home purchases, even for those who are well qualified, can be a leap of faith because buying a home is expensive. It's not just buying a home, you gotta buy the whole package. You gotta take care of the property, you gotta pay taxes, you gotta pay insurance." And then he says that, quote, "The reality is that buying a home is just the beginning of the home ownership experience, because after that initial excitement wears off, now you, the homeowner, are left with a regret or two, because after that initial excitement wears off, now you got to deal with the stresses of being a homeowner, and that's when people start to see the regrets." Across the board, between all age groups, from millennials to Gen Zers to baby boomers, there were 7 major regrets that people had, and this is in order from the biggest regrets to the smallest regrets. These were regrets that people of all age groups saw. The first biggest regret that people faced was that they didn't anticipate this high cost of ownership, things like taxes and maintenance costs. Number 2 was that the home that they bought was too small. Number 3 was that they bought a home in a bad location. Number 4 is that their mortgage rates are too high or they have a bad mortgage. Number 5, their home is too big. Number 6, they overpaid for their home. And number 7 is their home is not a good investment. So let's dive deep into all 7 of these things. Starting with the cost of home ownership, the first thing that you have to understand is that when you're analyzing the cost of living in a home, there's a lot more to the cost of actually living in the home than just your monthly payment. So let's assume that you wanted to live in this home, and if you rented this home, it would cost you $2,000 a month. So this is rent. And if you own the home, then your mortgage payments would be right around $1,500 a month. At this point, you might say, why in the world would I pay $2,000 a month to rent this home when I can buy the same home and build equity every single month with just a $1,500 monthly mortgage payment? Well, you're not comparing apples to apples, because there's a lot more to the cost of home ownership than just your mortgage payment. Because now, if you are the homeowner, you also have to pay your property taxes every single year. You're also going to have to pay for insurance. You're also going to have to pay for maintenance, because anytime something breaks, now it's your responsibility to fix it. And if you are the homeowner, you're also going to be the one paying for upgrades. So when you are the homeowner, yeah, you got to pay your mortgage costs, but you're also going to have to pay all the other fees associated with being the homeowner, because now you are the homeowner. The thing that you have to understand about real estate is that things break. If we jump back to the CNBC article, they say that among all homeowners, including millennials, the most common regret is underestimating how much the maintenance expenses and the other hidden costs associated with buying and owning a home are, because about 16% of homeowners and 21% of millennials regret buying a home because they didn't understand the cost of owning a home, because owning a home is not just how much it takes to pay your mortgage payment, it's everything else. And 1 out of 5 millennials regret buying a home because they don't understand the cost of this right here. So one of the easiest things that you can do if you want to get a real accurate cost of this is, before you actually buy a home, call up the city assessor, because the assessor will tell you what your property taxes are. A big mistake that people make is they go and buy a home and they see that, oh, this homeowner right now is paying just $5,000. So I will also only have to pay $5,000 in property taxes. But that is wrong, because anytime somebody buys a home, you have to now reassess the property's value, and the city is now going to reassess how much you have to pay in taxes. So before you buy a home, you want to know what your property taxes are going to be. The easiest way to do that is just by calling up the city hall, ask to speak with the tax assessor, and tell them that you're looking to buy the home, tell them what your purchase price would be or about there, and have them give you an estimate about what your taxes would be. That way you can get a good idea here. Then to get an idea about the insurance, the biggest thing that you want to understand about the cost of home ownership is you want to make sure that you're buying a home that you can afford. And if you can just barely afford the monthly mortgage payments, then it's going to be much harder for you to afford all of this. So you want to make sure that you can afford this comfortably. That way you can afford this comfortably as well. So you want to make sure you're making smart investment decisions and smart financial decisions for yourself, because you don't just want to stretch yourself so thin. That way you can buy this massive dream home that you cannot afford to take care of. So you want to be smart with your money. Now, I'm not going to go too deep in how to actually manage your money and make smart financial decisions in this video, but if you do want to learn more about that, our team put together an amazing PDF on money management and investing that you can read for free when you sign up for our daily newsletter. So if you want to get a free money management PDF that will walk you through how to use your money the right way, I'll put the link to how you can download this PDF for free in the description below. I want to talk about 2 and 3 together, because buying a home that's too small and buying a home in a bad location can go hand in hand, because sometimes what you'll see happen is you're looking at homes in a great area, and when you're in a great area, land prices are going to be higher and home costs are going to be higher. And so you might think, oh man, I cannot afford the dream home that I want in this area, so let's buy a home a little bit out of the city limits. And now you're going maybe into a bad location, and because of that, now you can buy a bigger home and a nicer home, but you're not in a good location, and so now you didn't get this, but you got this. The alternative is you might get this, but you don't have this. So sometimes you have to deal with this trade-off, and you have to understand what's more important to you here. But what you got to understand first about buying a home that's too small is you got to understand what you need, because sometimes you might not need all that space in your home if you can rent a storage unit, or you might not need all that space in your home if you can get a separate office. So you got to first understand what you need. This one, understanding the size of a home, is pretty self-explanatory. The bigger the home, the more it's going to cost you. Not only is it going to cost you more to buy the home, but it's going to cost you more to maintain the home, and you're going to have higher utility fees, because if you have a bigger home, you're going to have to pay more money to heat your home and cool your home. So you just got to understand how much space you need, and maybe you can get by with a smaller space if you rent out a storage unit or an office somewhere else, but again, that's going to be up to you to decide with your family. The thing that I want you to understand here about the bad location part, because this is so important, is you can change everything about a home. I mean, you can extend a home and make a home bigger. You can change the windows, you can change the kitchen, you can build a garage. But the one thing that you cannot change about a home is its location. I had a real estate mentor whose favorite saying was buy the worst home in the best location. So what he was saying is, if you're trying to find a good real estate investment property, look for the best areas where people want to be, and then buy the most beat up property, because that's going to get you the best deal. Then you can renovate the property and make it nicer. But you want to make sure that you're in the best location, because that's the one thing that you cannot change about your home. You can renovate the entire home, but you cannot change its location. So when you're trying to find a good location to buy a home in, there's a few factors that you want to pay attention to, because real estate is a long-term play. When you think about buying a home, you should be thinking about the next 10 years and 20 years and 30 years, not just the next 6 months. And so the things that you want to pay attention to are, 1, where are businesses moving to? If businesses are moving to your neighborhood or to your city, that's a good sign. If businesses are moving away, that's not a good sign. So you want to know, is money flowing into your city or not? Because if money is flowing into your city, that means your city is going to continue to drive property taxes, and they're going to have money to fund their police department, their schools, the fire department, and kind of just take care of the city and make it a fun place to live and be. So you want to know, is money flowing in or out? Second, look at the schools, especially if you have kids. You want to know, is this a good place for your kids to be going to school? Are they going to be able to make good friends here? Or is this a place where they're not going to get along? So if you plan on having kids, or if you have kids, definitely look at the schools. Third, just look at the lifestyle. I mean, how far are you from your work? How far are you from your family? How far are you from your friends? Because you're going to be spending a lot of time at your home. So you want to know, is this going to be a good location for you to get around places? The fourth thing you want to pay attention to, obviously, is crime. Is it a safe place for you to be? Because sometimes you're going to see a big difference in crime just by going to one other side of a street or one other side of a highway. And so you got to understand where you want to be, and you got to play all these factors together. I really want you to value this. When you're looking for a home for you to live in, especially a home that you're buying, make sure you value this in there, because this is super, super, super important, because this is the only thing that you cannot change about your home. So you want to make sure that when you're buying a home, you're buying a home in a good location, not just today, but something that's going to be a good location for 10, 20, 30 years in the future. Because if you're seeing businesses move away, and if you're seeing people move out of the city because they don't like the crime, they don't like the schools, they don't like whatever about the city, then that's a red flag. So when you're looking at buying a home, make sure this location is good and it's going to be improving in the future. The fourth biggest regret that people have when it comes to buying a home is getting a bad mortgage. So when you buy a home, chances are you're not going to have all the cash in your pocket to go out and buy a home, because a lot of people don't have $500,000 sitting in the bank account that they can just use to go out and buy a home cash. Now, if you do, great. You don't got to worry about this. But if you do have to get a mortgage, then you want to pay attention, because you want to make sure you're not getting screwed over by your bank or your lender. There are two main factors that are in your control that will determine what your interest rates are going to be when you get your mortgage. Now, obviously, you cannot control what interest rates are, but what you can control is your credit score. Let me get my marker open. Credit score and your down payment, because these two things will make a big impact on what your interest rates are that you're getting from your bank or your lender. So if you have a horrible credit score, or if you're not putting a lot of money down for your down payment, then the bank or your lender is going to look at you as a risky investment, and they're going to charge you a whole lot more in interest. But if you have a good credit score above 740, and if you're putting down a 20% down payment, now you are the cream of the crop. Now the bank is going to be fighting to get your business, because they're going to look at you as a very safe investment. So they're going to charge you the least amount of interest possible. So if you can come in and show the bank, hey, I got a 760 credit score, and yeah, I got the cash to put money down, now the bank is going to be doing whatever they can to lend you their money, because they're going to want to trust you with their money. So if you are thinking about buying a home and you don't have the best credit score, or if you don't have the cash to put down a 20% down payment, just understand that you're going to have to pay a little bit higher interest because of that. Now, one of the things that you can do is you get a mortgage right now, and then you work on your credit score, you work on increasing this down payment amount, or you work on building equity in your home, and then you refinance into a newer, cheaper interest rate mortgage. That's one thing that a lot of people like to do, but you just got to understand the game. You got to figure out what's right for you, because if you have a bad credit score, you don't have money for a down payment, you're going to pay the price with a higher mortgage rate. Beyond working on these two things, the next thing that you want to make sure that you're doing is shopping around, because some lenders are going to charge you a whole lot more for the exact same loan than other lenders. And so if you feel like you have a bad mortgage, then one of the things that you can do is just refinance into a new mortgage. That way you can get a better interest rate. So if you're going out and you're shopping for a brand new home, now you're getting a new mortgage. If that's you, you want to work on these two things. That way you can get the best mortgage rate possible. And of course, you want to be shopping around. If you have a mortgage and you feel like you don't have the best mortgage, or you want to see if you can get a lower mortgage, then you want to look at refinancing. Again, these two things will help you refinance. Now, it's not the down payment in this instance, it's how much equity you have in your home. But if you have equity and if you have a good credit score, you are going to get the best mortgage refinance rates. And again, when it comes time for the refinance, you want to make sure you're shopping around. That way you can make sure you're getting the best interest rate possible, because some lenders are going to charge you a whole lot more than other lenders for the exact same loan or refinance. Now, the concern that a lot of people have here is if you try to shop around a bunch of places and you try to get pre-qualified at multiple different lenders, you don't want to hurt your credit score. Well, the easiest way around that is just by using a mortgage comparison tool on the internet. And the following is an advertisement from our sponsor Credible, who operates a mortgage comparison website. At Credible, you can compare pre-qualified mortgage and refinance rates at no charge to you, because they have multiple lenders competing on their marketplace. You can compare great rates and find the best option for you. The process is simple. All you have to do is go onto Credible's website and enter in a few pieces of information, which just takes a few minutes, and then Credible will present you with actual pre-qualified rates from different lenders. That way you can compare. Credible's pre-qualification process is easy to use. It only takes a few minutes, and checking pre-qualified rates does not affect your credit score. So if you want to learn more and see what mortgage or refinance rates you might qualify for, I got the link to how you can do that with Credible in the description below. Credible does pay Minority Mindset an advertising fee when you submit a pre-qualification request, and Credible Operations Inc. NMLS number 1681276 is not available in all states. So if you want to learn more and see what mortgage or refinance rates you might qualify for, I got the link to how you you can do that with Credible in the description below. So the fifth biggest regret that people and millennials have when it comes to buying a home is that they felt that their home was too big after getting it. They saw this beautiful, massive mansion that they really liked. Maybe it wasn't a mansion, maybe it was just a nice sized home, and they felt like, wow, I can't wait to use all this space. And then you come in, you move, and you don't know what to do with all this extra space, and now you have to buy furniture for all this space, and now you have all this empty space in your home that you're never using, and it's not making you any money because you're not renting it out, and it's just sitting there collecting dust. So it's kind of funny. My ex-neighbor actually had this problem because they had this home. It was a pretty good sized home, and there was a couple rooms in the house that they never used. They lived in this home for like 20 years, and they had these 2 rooms where they never even bought furniture for these rooms because they never used these rooms. It was like an extra living room and an extra bedroom. They never bought furniture in, and they just never ended up using that space because they thought it was too big for them. They eventually moved out, but this is where you got to understand again, how much space do you need and what do you actually need? Now, obviously, if you're going to be working from home, you want to make sure that you have an office. If you're not going to be working from home, do you need an extra space for an office? So you got to understand how many bedrooms do you need, how many living rooms do you need, how many spaces do you need for an office. So this is really just doing your own due diligence and just knowing what you need instead of just falling in love with a beautiful looking home and then paying too much money because you bought a home that was way too big, and now that you own all this home, you got to pay to heat the whole home, you got to pay to cool the whole home, you got to pay property taxes on the whole home. So you just want to make sure you know what you need before you buy it. I'm going to go over 6 and 7 together because these 2 things also go hand in hand. So the 6th biggest regret that people had when it came to buying a home is they felt like they overpaid on their home, and the 7th biggest regret that people and millennials had when it came to buying a home is that they felt that their home was not a good investment. The mistake that I see so many home buyers make is they tell themselves, well, a home is an investment, and so if this home that I'm living in is an investment, it's okay for me to buy a bigger home because eventually this home will make me money when I sell my home. And so now people go out and they stretch themselves way too thin. They buy a home that they cannot afford because they sell themselves on the idea that their home is an investment. And it's not just you. I mean, your banker does that because your lender is going to say, well, this home is an investment. Let me lend you as much money as possible. That way you can go out and buy your dream home and it will make you money, because once it comes time for you to sell your home, you'll be able to sell it for more than what you bought it for. And your realtor is going to say the same thing. They're going to say, your home is an investment. You want to make sure that you have the best home possible because you're going to be spending so much time in here. And when it comes time for you to sell your home, if the market is up, you'll be able to sell your home for a big profit. And so everybody talks about this whole idea of your home being an investment because you can sell your home for more, hopefully, when it comes time for you to sell. And so this leads a lot of people to eventually overpay for their home because they get into the idea of thinking their home is an investment, then they fall in love with the property, they don't want to lose this home, so now you overpay for the home, and now you have spent so much money on a home, you're stretching yourself thin, you're living paycheck to paycheck. That way you can just fund this investment, which is your home, so you can hopefully one day sell your home for a profit or live mortgage free. I don't want you to think like that. Yes, you can sell your home for a profit. This is very possible, but you might also sell your home for a loss if there's a housing market crash or if something happens to the housing market. And so you do not want to go into the mindset of stretching yourself so thin and overpaying for a home. That way you can just have this dream home that you hope that you'll one day be able to sell for a profit. When you're trying to buy a home, I want you to look at your home like an expense. I want you to make sure that you can afford this expense because it might make you money, it might not. I don't want you to think of it as an investment. If you're really talking about owning real estate as an investment, I want you to go out and invest in rental properties or real estate investment properties that you're buying for the sole purpose of making money. Because when you own a rental property, now you're owning this property that's driving you cash flow, and that's why you're investing in this property, so it will make you money. When you buy a home to live in, you don't buy it for the sole purpose of making money, you're buying it so you can live there. So I want you to understand kind of this mindset of when you're buying a home, don't think of it as an investment. Think of it as a place where you're going to live, where you're going to use as an expense. If you do that, that will prevent you from overpaying on your home, because I want you to be a financially smart person and focus on building your wealth before you focus on building everybody else's wealth. And one of the easiest ways to do that is not by overpaying for your home and by understanding what a home is. Yes, I understand. Your home can make you money if you sell it for a profit, but you're not guaranteed to sell it for a profit, and that might not happen for 10, 20, 30, 40 years. So you want to make sure you're making smart decisions, and so when you're buying a home, don't overpay for it. And one of the easiest ways to do that is understand that your home is not an investment per se. If you really want to invest in real estate, buy a rental property. If you want to buy a home to live in, understand that it's not always going to make you money. So you want to understand what's going on, and you want to understand how to use your money the right way. And the thing that I also want you to understand is that if you overpay for a home because you buy a home that's too big, well, now you're also going to have to pay more costs to manage the home. According to the CNBC article, on average, you should estimate that you should spend 1 to 3% of your home's purchase price on annual maintenance. So if you buy a home that's $300,000, you should expect to spend somewhere between $3,000 and $9,000 a year in maintenance costs. So the bigger home you buy, the more your maintenance costs are going to be. So that's something you want to make sure you factor into your cost of owning a home, because like we said before, there's a lot more to the cost of owning a home than just your mortgage costs. If you enjoyed this video, here's a video on building wealth that I think you'll love. And while you're at it, download a free money management PDF. And as always, keep hustling. When you buy a condo, yeah, the condo association takes care of the outside, they take care of the roof and the kind of the car area and the landscaping. But when you deal with a condo, you also have to deal with a whole